Welcome to the chapter number 14, Center State Relations. The Constitution of India, being federal in structure, divides all powers legislative, executive, and financial between the center and the states. However, there is no division of judicial power as the Constitution has established an integrated judicial system to enforce both the central laws as well as state laws. Though the center and the states are supreme in their respective fields, the maximum harmony and coordination between them is essential for the effective operation of the federal system. Hence, the Constitution contains elaborate provisions to regulate the various dimensions of the relations between the center and the states. The center-state relations can be studied under three heads: legislative relations, administrative relations, financial relations. Legislative relations. Articles 245 to 255 in Part 11 of the Constitution deal with the legislative relations between the center and the states. Besides these, there are some other articles dealing with the same subject. Like any other federal constitution, the Indian Constitution also divides the legislative powers between the center and the states with respect to both the territory and the subjects of legislation. Further, the Constitution provides for the parliamentary legislation in the state field under 5 extraordinary situations, as well as the center's control over state legislation in certain cases. Thus, there are four aspects in the center-states legislative relations, which territorial extent of central and state legislation, distribution of legislative subjects, parliamentary legislation in the state field, and center's control over state legislation. Territorial extent of central and state legislation. The Constitution defines the territorial limits of the legislative powers vested in the center and the states in the following way. The Parliament can make laws for the whole or any part of the territory of India. The territory of India includes the states, the union territories, and any other area for the time being included in the territory of India. A state legislature can make laws for the whole or any part of the state. The laws made by a state legislature are not applicable outside the state except when there is a sufficient nexus between the state and the object. The parliament alone can make extraterritorial legislation. Thus, the laws of the parliament are also applicable to the Indian citizens and their property in any part of the world. However, the Constitution places certain restrictions on the plenary territorial jurisdiction of the Parliament. In other words, the laws of Parliament are not applicable in the following areas. The President can make regulations for the peace, progress, and good government of the 5 union territories: the Andaman and Nicobar Island, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, and Ladakh. A regulation so made has the same force and effect as an act of Parliament. It may also repeal or amend any act of parliament in relation to these union territories. The governor is empowered to direct that an act of parliament does not apply to a scheduled area in the state or apply with specified modifications and exceptions. The governor of Assam may likewise direct that an act of parliament does not apply to a tribal area, autonomous district in the state or apply with specified modifications and exceptions. The president enjoys the same power with respect to tribal areas, autonomous districts in Meghalaya, Tripura and Mizoram. Distribution of legislative subjects. The Constitution provides for a threefold distribution of legislative subjects between the center and the states, which list 1, the union list, that list 2, the state list, and list 3, the concurrent list in the 7th schedule. The Parliament has exclusive powers to make laws with respect to any of the matters enumerated in the union list. The list has at present 98 subjects, originally 97 subjects, like defense, banking, foreign affairs, currency, atomic energy, insurance, communication, interstate trade and commerce, census, audit, and so on. The state legislature has, in normal circumstances, exclusive powers to make laws with respect to any of the matters enumerated in the state list. This has at present 59 subjects, originally 66 subjects, like public order, police, public health and sanitation, agriculture, prisons, local government, fisheries, markets, theatres, gambling, and so on. Both the parliament and state legislature can make laws with respect to any of the matters enumerated in the concurrent list. This list has at present 52 subjects, originally 47 subjects, like criminal law and procedure, civil procedure, marriage and divorce, population control and family planning, electricity, labor welfare, economic and social planning, drugs, newspapers, books and printing press and others. The 42nd Amendment Act of 1976 transferred 5 subjects to concurrent list from state list, that is education, forest, weights and measures, protection of wild animals and birds, and administration of justice, constitution and organization of all courts except the Supreme Court and the High Courts. Parliament has power to make laws with respect to any matter for any part of the territory of India not included in a state, even though that matter is one which is enumerated in the state list. This provision has reference to the Union territories or the acquired territories if any. The 101st Amendment Act of 2016 has made a special provision with respect to goods and services tax. Accordingly, the Parliament and the state legislature have power to make laws with respect to goods and services tax imposed by the Union or by the state. Further, the Parliament has exclusive power to make laws with respect to goods and services tax where the supply of goods or services or both takes place in the course of interstate trade or commerce. The power to make laws with respect to residuary subjects, that is the matters which are not enumerated in any of the 3 lists, is vested in the Parliament. This residuary power of legislation includes the power to levy residuary taxes. From the above scheme, it is clear that the matters of national importance are the matters which require uniformity of legislation nationwide are included in the Union list. The matters of regional and local importance and the matters which permit diversity of interest are specified in the state list. The matters on which uniformity of legislation throughout the country is desirable but not essential are enumerated in the concurrent list. Thus, it permits diversity along with uniformity. In US, only the powers of the federal government are enumerated in the Constitution, and the residuary powers are left to the states. The Australian Constitution followed the American pattern of single enumeration of powers. In Canada, on the other hand, there is a double enumeration, federal and provincial, and the residuary powers are vested in the center. The Government of India Act of 1935 provided for a threefold enumeration: federal, provincial and concurrent. The present constitution follows the scheme of this act but with one difference, that is, under this act, the residuary powers are given neither to the federal legislature nor to the provincial legislature but to the Governor General of India. In this respect, India follows the Canadian precedent. The Constitution expressly secures the predominance of the Union list over the state list and the concurrent list, and that of the concurrent list over the state list. Thus, in case of overlapping between the Union list and the state list, the former should prevail. In case of overlapping between the Union list and the concurrent list, it is again the former which should prevail. Where there is a conflict between the concurrent list and the state list, it is the former that should prevail. In case of a conflict between the central law and the state law on a subject enumerated in the concurrent list, the central law prevails over the state law, but there is an exception. If the state law has been reserved for the consideration of the President and has received his assent, then the state law prevails in the state, but it would still be competent for the Parliament to override such a law by subsequently making a law on the same matter. Parliamentary legislation in the state field. The above scheme of distribution of legislative powers between the center and the states is to be maintained in normal times, but in abnormal times the scheme of distribution is either modified or suspended. In other words, the Constitution empowers the Parliament to make laws of any matter on any matter enumerated in the state list under the following 5 extraordinary circumstances. When Rajya Sabha passes a resolution, if the Rajya Sabha declares that it is necessary in the national interest that Parliament should make laws with respect to goods and services tax or a matter in the state list, then the Parliament becomes competent to make laws on that matter. Such a resolution must be supported by 2/3 of the members present and voting. The resolution remains in force for 1 year. It can be renewed any number of times but not exceeding 1 year at a time. The laws cease to have effect on the expiration of 6 months after the resolution has ceased to be in force. This provision does not restrict the power of a state legislature to make laws on the same matter, but in case of inconsistency between a state law and a parliamentary law, the latter is to prevail. During a national emergency, the Parliament acquires the power to legislate with respect to goods and services tax or matters in the state list, while a proclamation of national emergency is in operation. The laws become inoperative on the expiration of 6 months after the emergency has ceased to operate. Here also, the power of a state legislature to make laws on the same matter is not restricted, but in case of repugnancy between a state law and a parliamentary law, the latter is to prevail. When states make a request, when the legislature of two or more states pass resolutions requesting the parliament to enact laws on a matter in the state list, then the parliament can make laws for regulating that matter. A law so enacted applies only to those states which have passed the resolutions. However, any other state may adopt it afterwards by passing a resolution to that effect in its legislature. Such a law can be amended or repealed only by the parliament and not by the legislatures of the concerned states. The effect of passing a resolution under the above provision is that the parliament becomes entitled to legislate with respect to a matter for which it has no power to make a law. On the other hand, the state legislature ceases to have the power to make a law with respect to that matter. The resolution operates as abdication or surrender of the power of the state legislature with respect to that matter, and it is placed entirely in the hands of parliament, which alone can then legislate with respect to it. Some examples of laws passed under the above provision are Prize Competition Act 1955, Wildlife Protection Act 1972, Water Prevention and Control Pollution Act 1974, Urban Land Sealing and Regulation Act 1976, and Transplantation of Human Organs Act 1994. To implement international agreements, the Parliament can make laws on any matter in the state list for implementing the international treaties, agreements, or conventions. This provision enables the central government to fulfill its international obligations and commitments. Some examples of laws enacted under the above provision are United Nations Privileges and Immunities Act 1947, Geneva Convention Act 1960, Anti-Hijacking Act 1982, and legislations relating to environment and tariffs. During President's rule, when the President's rule is imposed in a state, the Parliament becomes empowered to make laws with respect to any matter in the state list in relation to that state. A law made so by the Parliament continues to be operative even after the President's rule. This means that the period for which such a law remains in force is not coterminous with the duration of the President's rule, but such a law can be repealed or altered or re-enacted by the state legislature. Centers control over state legislation. Besides the Parliament's power to legislate directly on the state subjects under the exceptional situations, the Constitution empowers the centre to exercise control over the state legislative matters in the following ways. The governor can reserve certain types of bill passed by the state legislature for the consideration of the president. The president enjoys absolute veto over them. Bills on certain matters enumerated in the state list can be introduced in the state legislature only with the previous sanction of the president. For example, the bills imposing restrictions on the freedom of trade and commerce. The centre can direct the states to reserve money bills and other financial bills passed by the state legislature for the president consideration during a financial emergency. From the above, it is clear that the Constitution has assigned a position of superiority to the centre in the legislative sphere. In this context, the Sarkaria Commission on Centre-State Relations 1983-88 observed the rule of federal supremacy is a technique to avoid absurdity, resolve conflict, and ensure harmony between the union and state laws. If this principle of union supremacy is excluded, it is not difficult to imagine its deleterious results. There will be every possibility of our two-tier political system being stultified by interference, strife, legal chaos, and confusion caused by a host of conflicting laws, much to the bewilderment of the common citizen. Integrated legislative policy and uniformity on basic issues of common union state concern will be stymied. The federal principle of unity in diversity will be very much a casualty. This rule of federal supremacy, therefore, is indispensable for the successful functioning of the federal system. Administrative relations. Articles 256 to 263 in Part 11 of the Constitution deal with the administrative relations between the centre and the states. In addition, there are various other articles pertaining to the same matter. Distribution of executive powers. The executive power has been divided between the centre and the states on the lines of the distribution of legislative powers, except in few cases. Thus, the executive power of the centre extends to the whole of India, to the matters on which the Parliament has exclusive power of legislation, that is the subjects enumerated in the union list, and to the exercise of rights, authority, and jurisdiction conferred on it by any treaty or agreement. Similarly, the executive power of a state extends to its territory in respect of matters on which the state legislature has exclusive power of legislation, that is the subjects enumerated in the state list. In respect of matters on which both the parliament and the state legislatures have power of legislation, the subjects enumerated in the concurrent list, the executive power rests with the states except when a constitutional provision or a parliamentary law specifically confers it on the center. Therefore, a law on a concurrent subject, though enacted by the parliament, is to be executed by the states except when the constitution or the parliament has directed otherwise. Obligation of states and the center. Obligation of states and the center. The constitution has placed two restrictions on the executive power of the states in order to give ample scope to the center for exercising its executive power in an unrestricted manner. Thus, the executive power of every state is to be exercised in such a way as to ensure compliance with the laws made by the parliament and any existing law which apply in the state, and as not to impede or prejudice the exercise of executive power of the center in the state. While the former lays down a general obligation upon the state, the latter imposes a specific obligation on the state not to hamper the executive power of the center. Articles related to center-state legislative relations at a glance. In both the cases, the executive power of the center extends to giving of such directions to the state as are necessary for the purpose. The sanction behind these directions of the center is coercive in nature. Thus, Article 365 says that where any state has failed to comply with or to give effect to any directions given by the center, it will be lawful for the President to hold that a situation has arisen in which the government of the state cannot be carried on in accordance with the provisions of the Constitution. It means that in such a situation, the President's rule can be imposed in the state under Article 356. Center's directions to the states. In addition to the above two cases, the center is empowered to give directions to the states with regard to the exercise of their executive power in the following matters: the construction and maintenance of means of communication declared to be of national or military importance by the state, the measures to be taken for the protection of the railways within the state, the provision of adequate facilities for instruction in the mother tongue at the primary stage of education to children belonging to linguistic minority groups in the state, and the drawing up and execution of the specified schemes for the welfare of the scheduled tribes in the state. The coercive sanction behind the central directions under Article 365 mentioned above is also applicable in these cases. Mutual delegation of functions. The distribution of legislative powers between the center and the states is rigid. Consequently, the center cannot delegate its legislative powers to the states, and a single state cannot request the parliament to make a law on a state subject. The distribution of executive power in general follows the distribution of legislative powers, but such a rigid division in the executive sphere may lead to occasional conflicts between the two. Hence, the Constitution provides for intergovernment delegation of executive functions in order to mitigate rigidity and avoid a situation of a deadlock. Accordingly, the President may, with the consent of the state government, entrust to that government any of the executive functions of the center. Conversely, the governor of a state may, with the consent of the central government, entrust to that government any of the executive functions of the state. This mutual delegation of administrative functions may be conditional or unconditional. The Constitution also makes a provision for the entrustment of the executive functions of the center to a state without the consent of that state. But in this case, the delegation is by the Parliament and not by the President. Thus, a law made by the Parliament on a subject of the Union list can confer powers and impose duties on a state, or authorize the conferring of powers and imposition of duties by the center upon a state, irrespective of the consent of the state concerned. Notably, the same thing cannot be done by the state legislature. From the above, it is clear that the mutual delegation of functions between the center and the state can take place either under an agreement or by legislation. While the center can use both the methods, a state can use only the first method. Cooperative between the center and states. The Constitution contains the following provisions to secure cooperation and coordination between the center and the states. The Parliament can provide for the adjudication of any dispute or complaint with respect to the use, distribution, and control of waters of any interstate river and river valley. The President can establish under Article 263 an interstate council to investigate and discuss subjects of common interest between the center and the states. Such a council was set up in 1990. Full faith and credit is to be given throughout the territory of India to public acts, records, and judicial proceedings of the center and every state. The Parliament can appoint an appropriate authority to carry out the purposes of the constitutional provisions relating to the interstate freedom of trade, commerce, and intercourse, but no such authority has been appointed so far. All India services, like in any other federation, the centre and the states also have their separate public services called the central services and the state services respectively. In addition, there are All India services, IASP, IPS, IFS. The members of these services occupy top positions or key posts under both the centre and the states and serve them by turns, but they are recruited and trained by the centre. These services are controlled jointly by the centre and the states. The ultimate control lies with the central government, while the immediate control vests with the state governments. In 1947, Indian Civil Services was replaced by IAS and the Indian Police. IP was replaced by IPS and were recognized by the Constitution as All India Services. In 1966, the Indian Forest Service (IFS) was created as the third All India Service. Article 312 of the Constitution authorizes the Parliament to create new All India services on the basis of Rajya Sabha resolution to that effect. Each of these three All India services, irrespective of their division among different states, form a single service with common rights and status and uniform scales of pay throughout the country. Though the All India services violate the principle of federalism under the Constitution by restricting the autonomy and patronage of the states, they are supported on the ground that they help in maintaining high standard of administration in the centre as well as in the states. They help to ensure uniformity of the administrative system throughout the country, and they facilitate liaison, cooperation, coordination, and joint action on the issue of common interest between the centre and the states. While justifying the institution of All India services in the Constituent Assembly, Dr. B. R. Ambedkar observed that the dual polity which is inherent in a federal system is followed in all federations by a dual service. In all federations, there is a federal civil service and a state civil service. The Indian Federation, though a dual polity, will have a dual service, but with one exception. It is recognized that in every country there are certain posts in its administrative setup which might be called strategic from the point of view of maintaining the standard of administration. There can be no doubt that the standard of administration depends upon the caliber of the civil servants who are appointed to the strategic post. The Constitution provides that without depriving the states of their rights to form their own civil services, there shall be an All India service recruited on an All India basis with common qualifications, with uniform scale of pay, and members of which alone could be appointed to those strategic posts throughout the Union. Public Service Commissions. In the field of Public Service Commissions, the centre-state relations are as follows. The chairman and members of the State Public Service Commission, though appointed by the governor of the state, can be removed only by the president. The Parliament can establish a joint State Public Service Commission (JSPSC) for two or more states on the request of the state legislatures concerned. The chairman and members of the JSPSC are appointed by the president. The Union Public Service Commission (UPSC) can serve the needs of a state on the request of the state government and with the approval of the president. The UPSC assists the states when requested by two or more states in framing and operating schemes of joint recruitment for any services for which candidates possessing special qualifications are required. Integrated judicial system. Though India has a dual polity, there is no dual system of administration of justice. The Constitution, on the other hand, established an integrated judicial system with the Supreme Court at the top and the state high courts below it. This single system of courts enforces both the central laws as well as the state law. This is done to eliminate diversities in the remedial procedure. The judges of a state high court are appointed by the president in consultation with the Chief Justice of India and the governor of the state. They can also be transferred and removed by the president. The Parliament can establish a common high court for two or more states. For example, Maharashtra and Goa or Punjab and Haryana have a common high court. Relations during emergencies. During the operation of a national emergency under Article 352, the centre becomes entitled to give executive directions to a state on any matter. Thus, the state governments are brought under the complete control of the centre, though they are not suspended. When the president's rule is imposed in a state under Article 356, the president can assume to himself the functions of the state governments and powers vested in the governor or any other executive authority in the state. During the operation of a financial emergency under Article 360, the center can direct the states to observe canons of financial propriety and can give other necessary directions, including the reduction of salary of persons serving in the state. Other provisions. The Constitution contains the following other provisions which enable the center to exercise control over the state administration. Article 355 imposes two duties on the center: to protect every state against external aggression and internal disturbance, and to ensure that the government of every state is carried on in accordance with the provisions of the Constitution. The governor of a state is appointed by the President. He holds office during the pleasure of the President. In addition to the constitutional head of the state, the governor acts as an agent of the center in the state. He submits periodical reports to the center about the administrative affairs of the state. The State Election Commissioner, though appointed by the governor of the state, can be removed only by the President. Extra constitutional devices. In addition to the above mentioned constitutional devices, there are extra constitutional devices to promote cooperation and coordination between the center and the states. These include a number of advisory bodies and conferences held at the central level. The non-constitutional advisory bodies include the Niti Aayog, which succeeded the Planning Commission, the National Integration Council, the Central Council of Health and Family Welfare, the Central Council of Local Government, the Zonal Councils, the Northeastern Council, the Central Council of Indian Medicine, the Central Council of Homeopathy, the Transport Development Council, the University Grants Commission, and so on. The important conferences held either annually or otherwise to facilitate center-state consultation on a wide range of matters are as follows: the Governors' Conference, presided over by the President; the Chief Ministers' Conference, presided over by the Prime Minister; the Chief Secretary's Conference, presided over by the Cabinet Secretary; the Conference of Inspector General of Police; the Chief Justice's Conference, presided over by the Chief Justice of India; the Conference of Vice Chancellors; the Home Ministers' Conference, presided over by the Central Home Minister; the Law Ministers' Conference, presided over by the Central Law Minister. Financial relations. So Articles 268 to 293 in Part 12 of the Constitution deal with center-state financial relations. Besides these, there are other provisions dealing with the same subject. These together can be studied under the following heads: allocation of taxing powers. The Constitution divides the taxing powers between the center and the states in the following way: the Parliament has exclusive power to levy taxes on subjects enumerated in the Union list, which are 13 in number. The state legislature has exclusive power to levy taxes on subjects enumerated in the state list, which are 18 in number. There are no tax entries in the concurrent list. In other words, the concurrent jurisdiction is not available with respect to tax legislation, but the 101st Amendment Act of 2016 has made an exception by making a special provision with respect to goods and services tax. This amendment has conferred concurrent power upon Parliament and state legislatures to make laws governing goods and services tax. The residuary power of taxation, that is the power to impose taxes not enumerated in any of the three lists, is vested in the Parliament. Under this provision, the Parliament has imposed gift tax, wealth tax, expenditure tax. The Constitution also draws a distinction between the power to levy and collect a tax and the power to appropriate the proceeds of the tax so levied and collected. For example, the income tax is levied and collected by the center, but its proceeds are distributed between the center and the states. Further, the Constitution has placed the following restrictions on the taxing powers of the states: a state legislature can impose taxes on professions, trades, callings, and employments, but the total amount of such taxes payable by any person should not exceed rupees 2,500 per annum. A state legislature is prohibited from imposing a tax on the supply of goods or services, or both, in the following two cases: where such supply takes place outside the state, and where such supply takes place in the course of import or export. Further, the Parliament is empowered to formulate the principles for determining when a supply of goods or services, or both, takes place outside the state or in the course of import or export. A state legislature can impose tax on the consumption or sale of electricity, but no tax can be imposed on the consumption or sale of electricity which is consumed by the center or sold to the center, consumed in the construction, maintenance, or operation of any railway by the center or by the concerned railway company, or sold to the center or the railway company for the same purpose. A state legislature can impose a tax in respect of any water or electricity stored, generated, consumed, distributed, or sold by any authority established by Parliament for regulating or developing any intrastate river or river valley, but such a law, to be effective, should be reserved for the President's consideration and receive his assent. Distribution of tax revenues. The 80th Amendment Act of 2000 and 101st Amendment Act of 2016 have introduced major changes in the scheme of the distribution of tax revenues between the centre and the states. The 80th Amendment was enacted to give effect to the recommendations of the 10th Finance Commission. The Commission recommended that out of the total income obtained from certain central taxes and duties, 29% should go to the states. This is known as the Alternative Scheme of Devolution and came into effect retrospectively from April 1, 1996. This amendment has brought several central taxes and duties like corporation tax and customs duties at par with the income tax, taxes on income other than the agricultural income as far as their constitutionally mandated sharing with the states is concerned. The 101st Amendment has paved the way for the introduction of a new tax regime, goods and services tax (GST) in the country. Accordingly, the amendment conferred Accordingly, the amendment conferred concurrent taxing powers upon the Parliament and the state legislatures to make laws for levying GST on every transaction of supply of goods or services or both. The GST replaced a number of indirect taxes levied by the Union and the state governments and is intended to remove cascading effect of taxes and provide for a common national market for goods and services. The amendment provided for subsuming of various central indirect taxes and levies such as central excise duty, additional excise duty levied under the medicinal and toilet preparations, Excise Duties Act 1955, service tax, additional customs duty commonly known as countervailing duty, special additional duty of customs, and central surcharges and cesses so far as they related to the supply of goods and services. Similarly, the amendment provided for subsuming of state value-added tax, sales tax, entertainment tax other than the tax levied by the local bodies, central sales tax levied by the center and collected by the states, octroi and entry tax, purchase tax, luxury tax, taxes on lottery, betting and gambling, and state surcharges and cesses in so far as they related to the supply of goods and services. Further, the amendment deleted Article 268A as well as entry 92C in the Union list. Both are dealing with service tax. They were added earlier by the 88th Amendment Act of 2003. The service tax was levied by the centre but collected and appropriated by both the centre and the states. After the above two amendments, 80th and 101st, the present position with respect to the distribution of tax revenues between the centre and the states is as follows. Taxes levied by the centre but collected and appropriated by the states, Article 268. This category includes the stamp duties on bills of exchanges, checks, promissory notes, policies of insurance, transfer of shares and others. The proceeds of these duties levied within any state do not form a part of the consolidated fund of India but are assigned to that state. Taxes levied and collected by the centre but assigned to the state, Article 269. The following taxes fall under this category: taxes on the sale or purchase of goods other than newspapers in the course of interstate trade or commerce, taxes on the consignment of goods in the course of interstate trade or commerce. The net proceeds of these taxes do not form a part of the consolidated fund of India. They are assigned to the concerned states in accordance with the principles laid down by the Parliament. C. Levy and collection of goods and services tax in course of interstate trade or commerce, Article 269A. The goods and services tax on supplies in the course of interstate trade or commerce are levied and collected by the centre, but this tax is divided between the centre and the states in the manner provided by Parliament on the recommendations of the GST Council. Further, the Parliament is also authorized to formulate the principles for determining the place of supply and when a supply of goods or services or both takes place in the course of interstate trade or commerce. Taxes levied and collected by the centre but distributed between the centre and the states, Article 270. This category includes all taxes and duties referred to in the Union list except the following: duties and taxes referred to in Articles 268, 269 and 269A mentioned above, surcharge on taxes and duties referred to in Article 271 mentioned below, and any cess levied for specific purposes. The manner of distribution of the net proceeds of these taxes and duties is prescribed by the President on the recommendation of the Finance Commission. Surcharge on certain taxes and duties for purposes of the centre, Article 271. The Parliament can at any time levy the surcharges on taxes and duties referred to in Articles 269 and 270. The proceeds of such surcharges go to the center exclusively. In other words, the states have no share in these surcharges. However, the goods and service taxes is exempted from this surcharge. In other words, this surcharge cannot be imposed on the GST. Taxes levied and collected and retained by the states. These are the taxes belonging to the states exclusively. They are enumerated in the state list under 18 number. These are land revenue, taxes on agricultural income, duties in respect of succession to agricultural land, estate duty in respect of agricultural land, taxes on lands and buildings, taxes on mineral rights, duties of excise on alcoholic liquors for human consumption, opium, Indian hemp and other narcotic drugs and narcotics but not including medicinal and toilet preparations containing alcohol or narcotics, taxes on the consumption or sale or electricity, taxes on the sale of petroleum crude, high-speed diesel, motor spirit, natural gas, aviation, turbine fuel and alcoholic liquor for human consumption but not including sale in the course of interstate trade or commerce or sale in the course of international trade or commerce of such goods, taxes on goods and passengers carried by road or inland waterways, taxes on vehicles, taxes on animals and boats, tolls, taxes on professions, trades, callings and employments, capitation taxes, taxes on entertainments and amusements to the extent levied and collected by a panchayat or a municipality or a regional council or a district council, stamp duty on documents except those specified in the union list, and 18 fees on the matters enumerated in the state list except court fees. Distribution of non-tax revenues. This center the receipts from the following from the major sources of non-tax revenues of the center: posts and telegraphs, railways, banking, broadcasting, coinage and currency, central public sector enterprises, SG and labs and others. The states the receipts from the following from the major sources of non-tax revenues of the states: irrigation, forest, fisheries, state public sector enterprises, SG and labs and others. Grants in aid to the states. Besides sharing of taxes between the center and the states, the constitution provides for grants in aid to the states from the central resources. There are two types of grants in aid, with statutory grants and discretionary grants.